Yo, what's going on, everybody? It's Tuesday, July 9th. So, big day with Powell speaking. He did his semi-annual testimony in Congress today, talking about monetary policy. Folks, I don't pay attention to that stuff. This morning and yesterday, I sent out an email to my subscribers. I said, just be prepared for some volatility, because that's what always happens. I mean, you get people, they hang on every word, they hang on every pronouncement, they hang on every statement that comes out of the guy's mouth, or anything having to do with monetary policy, any blurb, anything like that. And they jump in and they jump out and they jump back in and they jump out. If you think this is a way to make money, and I've explained so many times, like, you're not going to beat these algorithmic traders, these guys like Citadel and Virtue Financial. I've spoken about this so many times. These guys have their servers right there at the New York Stock Exchange, right there at the CME's data center in Illinois, and they front run. And if you're playing this game like you're sitting there watching CNBC, waiting to hear something that Powell says, and then he says something, and then you jump in, and then 10 minutes later, he contradicts himself, and you jump out. I mean, maybe you guys are not doing it, because I think if you've been following this channel and me for a while, I always advise, like, have some perspective, have emotional control, have discipline. Stick with the big picture, the fundamental outlook. So I suspect that many of you don't have this kind of behavior. At least I hope not. But it just goes to show you that this is out there. And it's great for us. I mean, we could take advantage of stuff like this because people lack self-control. And again, it gets back to this gambling mentality that I've spoken about so many times, where people are in this game. They think they're in the game to make money, but they're really in the game for action. I mean, I know people sitting at home and they got, 10 screens set up with every screen has 20 different little graphics or news tickers going by, and CNBC, and then they're sitting there looking at this thing tick by tick, second by second. It's just crazy, man. Man, it's crazy, I'm telling you. Anyway, let's talk about what's going on. Folks, first I want to mention that don't be fooled by the market averages, okay? We made another new high today in the NASDAQ and the S&P. And I want to explain that, and you probably already noticed, I think most of you already noticed, that those market averages are weighted. In other words, they favor the big capitalization companies, and, companies like Nvidia and Apple, and that's what's been pushing around these averages into new all-time record highs almost on a daily basis. Okay, there was a time last year and earlier this year when it was a broader market advance, but now it's really, really narrowing. It's these moves every single day into new record highs. It's really being driven by the big cap names. If you look at a non-weighted, and I forget it off the top of my head, but there are some indices, some ETFs that are non-weighted, they're not doing that well, okay? They're barely up for the year. And, that's consistent with a slowdown in the economy. Like I've been telling you guys, like the stock market is going to follow the economy. I think I repeat that almost every single video that I make. At least recently, I've been repeating that. I want to hammer that point home, because a lot of people think it's the other way around, like it's the tail that wags the dog, like the stock market leads the economy. It doesn't. So if you look at a non-weighted index, it's not doing that great. Okay, and again, that's consistent with a slowdown in the economy. It's a slowdown that I said was going to happen, that I called, not because I'm some kind of genius, but I focus on what I always say, which is the first derivative of economic activity, which is these flows. And that has been clearly indicating, and I've said many times when I've spoken about the Atlanta Fed's GDP now forecast, I said every time it popped up, I said they're going to have to bring it back down. They're going to have to bring it back down. Net government transfers are down $242 billion compared to last year. The leading transfers, that means top line spending, government spending, that's strong. Okay, that's $101 billion up over last year. That's the strongest we've seen since March, going back to March. But taxes are taking a big bite out of that, and I've explained why that is so. It's not because we had a tax increase. It's because it's the way the system is set up. It's kind of like the inverse of the automatic stabilizers. When the economy contracts, you get more spending automatically because people get unemployment benefits, they get food stamps, they get Medicaid. These programs are automatic, and as when we get an economic contraction, more people become eligible for these programs, and it necessarily increases government spending to create a safety net. That's what it was designed for. So that's good on the downside, but on the upside, it works the same way, only in reverse. All right, when the economy expands for a lengthy period of time, more tax revenues are generated. This is the classic, like Arthur Laffer's supply side economic theory, which actually works for a while. Like when the economy, you see it working. As a matter of fact, it works so well that it's a detriment to sustainable economic growth, because as the economy, he's right in the fact that when the economy grows, it throws off more taxes, it shrinks the deficit, which is, I don't use that term, I use net government transfers, and that's what's happening. Net government transfers are shrinking. So little Arthur Laffer, he's right in that, but he doesn't understand that actually acts as a kind of an economic brake, like a brake on your car. Imagine you're driving your car, and the faster your car goes, that the brake would start to come on automatically and slow the car down. That's exactly what these tax, the way it's structured, that's the way it works. I mean, that's a great analogy. Like you're driving your car, and the faster the car goes, the car has a mechanism built in that the faster it goes, the brake starts to come on by itself and slow the car down. That's the best way for me to describe it, and that's exactly what is happening. We haven't had a tax increase, but that's the way the system is set up. And in reverse, if the car is slowing down, then it's set up so that the accelerator, the gas pedal, or the electric pedal, whatever you drive, it starts to, speed the thing up. That's the way it's set up. So there's really nothing we can do about it. The only way to keep it going, like in the case of what we have currently happening, would be if Congress said, okay, we're going to cut taxes right now. And with this administration, they're not going to do that. Or if they said, well, we're going to increase the spending. And spending has increased with some of these, with the recent defense bill. I see it. That's why I said, like, leading spending flows, top line spending flows. They're at the highest level year over year, $101 billion over last year since March 3rd. And that's this defense bill that was passed, I don't know, when was that, in May or June, this defense bill. I spoke about that. So that's kicking in right now. And that's actually a good thing, because if we didn't have that, those net government transfers, all right, that's the leading flows, the top line flows minus taxes, that would be dropping even more. So I think now we've stabilized at this minus 200. By the way, I just, when I did the workup of the numbers today, on Friday, just last Friday, July 5th, we finally recovered all of the April, June tax drains by like 3 billion. Okay, so we recovered it all, plus an additional little 3 billion. But yesterday we had like a 10.8 billion, 10.9 billion drain again. So we're down again by like 7 point something billion. So we're still struggling with that April, June, with those April, June tax drains. The good news is next month in August, we get a quarterly interest payment. So, I mean, the best scenario right now, if you're thinking about how do I trade this thing, I mean, if we could get a correction now going into August, that would be a beautiful setup for a buying opportunity with that August quarterly interest payment coming in. I mean, that's something you got to hope for. If we could get a pullback right now, a correction right now, look, we got today Powell. I was talking about that. I don't pay any attention. I don't even know what he said, to be honest with you. Thursday, we have the CPI number. I think it's going to come in line with, more on the dovish side. So I don't think that's going to trigger a correction. It could. I mean, I could be wrong. Friday, we got the producer prices. I also think that's going to come in on the dovish side. So I don't think that's going to trigger a correction there. But if we can get a correction from now until early August, I mean, that would be a beautiful setup for a buying opportunity with that quarterly interest payment coming in August. So yeah, if not, I mean, the market averages are going to keep trending higher. Again, they're influenced by the big cap stocks. The broader market is not doing anywhere near as well. Okay, you might have stocks right now that are not doing well. I give almost every day I send out recommendations of good companies now that are kind of coming down and offering buying opportunities, okay, which me personally, I'm taking advantage of that. So that's something you might want to consider, but you have to go to my website and sign up for a 30-day free trial of MMT Trader. And by the way, I forgot to mention, please like and subscribe if you choose to. I really appreciate it. It's been helping the channel grow, and that's a good thing. All right, everybody, that's it for today. Enjoy. Talk to you tomorrow. Bye.